Hey everyone, welcome back to Crypto Ninjas. I'm Daily and I'm here to guide you through crypto investing in the simplest way possible and make sure you avoid the mistakes that most beginners make when diving into this market. The crypto world is full of opportunities, but also pitfalls that can set you back if you're not careful. Today, I'm going to talk about the 5 biggest mistakes that can cripple your crypto investing journey, and more importantly, how to avoid them. I've been around for more than 4 years, so these are my hard-earned lessons. Make sure to tune in, smash that like button, and subscribe to Crypto Ninjas for the best crypto content. Let's kick things off with a critical mistake that's easy to avoid, but unfortunately too common: failing to do your own research. This market is harder than ever, with hundreds of thousands of coins created on a daily. If years ago, we only have a few big potential tokens, now we've got memes, a lot of them, and too many tech coins. If you don't know how to research, you will fail to make any money. I can't stress this enough. If you're just jumping into crypto based on some X post or a random Telegram, Discord group suggestion, you're setting yourself up for failure. Sure, you might get lucky sometimes, but luck isn't going to last. The truth is, research is your best friend when it comes to crypto investing. Every serious investor looks for these core elements when researching any project, depending on the type of tokens as well. If we're talking about tech, look for the use case. What problem does this crypto solve? Token designs. How are tokens distributed? Are there any big unlocks coming? The team. Are the developers and leaders transparent and reputable? Community and partnerships. Does the project have active users, partnerships, and strong backing? Social sentiment. What's the general public talking about this token compared to its actual utilities and real-world adoption? Take Ethereum, for example. Its use case is huge. It powers the entire DeFi ecosystem, allowing people to borrow, lend, and trade without intermediaries. Ethereum has its own ETF. Big companies and asset managers are loading up on Ethereum. However, for quite some time, Ethereum underperformed compared to Bitcoin, so the community was flooding it, calling it dead. Price was stuck at $2,400 for some times, but due to its utilities and real-world adoption, Ethereum finally exploded and now trading at $3,800. So look for any token that has crucial utilities to the industry, massively adopted by companies and asset managers, but negative social engagements. Those are likely ticking time bomb that's waiting to explode. Don't rely on hype. Make sure there's real value behind the coin. When it comes to meme coins, that's for another video. Next up, we have not diversifying your portfolio. This is one of the biggest mistakes any beginner can make in crypto. Imagine this: you put all your money into one coin. Maybe you think Ethereum or BNB is pumping up, but what happens if something goes wrong? Vitalik has another girlfriend, CZ caught himself in another trouble. If you put all your eggs in one basket, you risk losing everything. Diversification is key to managing risk. This doesn't mean you have to own every coin out there, but you should spread your investments across a few carefully chosen coins. Here's how you can diversify. 1. Bitcoin. Put your majority of money into Bitcoin. It will outperform any crypto in the long run. 2. Large cap coins like Ethereum or BNB or Cardano or Solana, which are relatively stable and established. 3rd, mid cap coins like Bitansor or Ondo Finance, which have higher potential but come with more volatility. 4th, small cap or emerging coins like Bera, where the risk is higher, but the reward could be significant if the project takes off. 5. Memes. Do not miss out on meme coins no matter how degenerate they sound. Allocate just a tiny portion of your portfolio to trade meme coins. My recommendation is wait for clear trends. Do not ape in random meme coins without knowing what they stand for. For example, the past few days, the new Grok AI Companions meme coins exploded, and if you pay a little time following Elon's tweets, you could get in early on big gainers like Ani or Valentine. This will take much effort, but you can gain 10 to 20 times easily in less than 24 hours. Again, I recommend using a tiny portion of your portfolio, which you're comfortable of losing. Another huge mistake is chasing quick profits or constantly looking for the next moonshot. Look, You ever sell your altcoins to buy different ones because they seem to pump higher, just to see your previous one's moon and the current ones now go down? Most people lose money when they chase that high short-term return. It might sound tempting, but in crypto, it's a dangerous game. The market moves fast, and while the potential for quick gains is real, so is the potential for massive losses. Chasing these short-term swings will likely lead to buying at the top and selling at the bottom. 1. Focus on long-term growth and invest in solid projects with real use cases. For example, Ethereum and BNB are tried and true. 2. Set realistic goals and be prepared for volatility. Don't panic if a coin drops. Stick to your strategy and be patient. That's the key to long-term success. Tip: consider using dollar cost averaging. This means investing small, consistent amounts over time, regardless of the market's ups and downs. DCA removes the temptation to chase profits and helps you avoid emotional investing. Alright, here's a mistake that could cost you everything: ignoring security. I'm sure you've heard horror stories about people losing all their crypto because they didn't set up proper security. Unfortunately, this is more common than you'd think. Hackers are constantly looking for weak points in wallets and exchanges to steal your funds. Here are a few security tips that could save your assets. 1. Enable two-factor authentication everywhere, especially on exchanges and wallets. 2. Use a hardware wallet for long-term storage. Never leave large amounts of crypto on exchanges. 3. Don't share private keys or recovery phrases with anyone, not even support from exchanges. Don't click on random links online. Always double-check URLs and links before clicking, even if it's from a seemingly reputable person online. Always be skeptical. Finally, let's talk about one of the most dangerous mistakes in crypto: fear of missing out. You've probably heard about people making massive profits on memes. When a coin suddenly takes off, it's easy to jump in just because you don't want to miss the boat. But here's the thing: when a coin starts to pump like that, it's often too late. You're buying at the peak, and just as quickly as it rises, it can come crashing down. I talked about investing in memes, but you have to follow the trend. Invest with minimal amount, and you have to be super early. If not, just skip it and look for new opportunities. How to avoid this mistake: stick to your investment strategy. If a coin is going up fast and you weren't already holding it, it's usually better to wait for a pullback before entering. Don't let your emotions drive your decisions. If you find yourself getting anxious about missing out, remember, there are always new opportunities, and patience is your best ally in investing. Before we wrap up, here's a bonus tip: start small and scale up. Especially if you're new to crypto, don't go all in right away. Start with an amount you're comfortable with, and as you gain confidence and knowledge, increase your exposure. At the end of the day, crypto is still a risky investment. There are other sources like gold, stocks, bonds, and real estate. Take it slow, educate yourself, and you'll be set for long-term success. Now, you know the 5 biggest mistakes crypto investors make and how to avoid them. Do your own research, diversify, be patient, focus on security, and don't fall for FOMO. So, what mistakes have you made or seen other investors make? Drop a comment below and let's talk about it. I'll respond to every comment. If you found this video helpful, don't forget to smash that like button and subscribe to Crypto Ninjas for daily tips, strategies, and insights to level up your crypto journey. And remember, if you're ready to start trading crypto safely, use BBK640Y5 on Binance to get 20% off trading fees plus up to $100 in bonuses. Thanks for tuning in, and I'll catch you tomorrow with more crypto contents here on Crypto Ninjas.